Good morning. Welcome my dear students for the session. So in today's session, before starting off, let me introduce myself. Myself Pavithra from Soundarya Institute of Management and Science, Bangalore. So in today's session, let's go with the topic from second semester BBA, that is Financial Accounting Hire Purchase System. From Hire Purchase System, I have chosen a small, to start off from the basic, we have started off from 6 marks problems initially. So before jumping into the problems, let's see or let's understand the concept of hire purchase system in a brief or gist manner. So to start off, the unit is hire purchase system. What is hire purchase system? We have heard of installment and hire purchase system both. So to understand hire purchase system first, it is nothing but basically there are two persons involved in hire purchase system. One is hire purchaser and hire vendor. What these two parties do is, one person called as hire vendor, he will have the assets like machinery or any other assets with him, capital assets with him. What hire purchaser or buyer does here is, he will not have enough capital or investment to purchase all these assets at once. So he goes to the hire vendor and purchases this particular machinery or particular capital asset on hire basis. So what happens is, basically two parties comes to an agreement or comes to a condition where purchasing of a machinery or an asset happens. So just a purchase or a selling will not happen, they will come to an agreement called hire purchase agreement, where the conditions also will be termed. Now with the conditions, they will also decide what will be the cash price, they will also decide what will be the installments and the interest that has to be calculated every year for the hire purchases that happens. So the important key concepts that you have to understand is, there are two parties in hire purchasing system. One is hire purchaser and vendor. Second thing is, you also have to understand what is cash price. Cash price is nothing but the price at which the agreement agrees to buy the machinery or to buy the asset. So in an agreement, they will clearly mention the machinery or the asset is being purchased, or the machinery is being hire purchased at 20,000 or 30,000. That becomes the cash price. Coming to the interest, when this hire basis happens, when you go and purchase the asset, immediately the hire purchaser will not get the title or the possession of the goods. What happens is, until the installment completes on this asset, the possession of the goods will be with hire vendor himself. Once all the installments are completed, then the opposition or the title comes to the hire purchaser. So until then, you will have to pay interest along with installments that will be given in the agreement. So the third one is, coming to the accounting treatment in hire purchase system, we have three methods that we follow. That is asset accrual method, outright property method and interest suspense method. But according to Bangalore University syllabus BBA, we have only first method, that is asset accrual method, that is given in the syllabus. So with this much brief introduction, let's see a small basic question or a small basic problem with calculation of interest. Before going to the actual calculation, let's see how the format looks like when it comes to calculation of interest. So this is a small format. This question or a format is basically asked for 6 marks, section B in Bangalore University. So when we think of the format goes like this. For when you purchase an asset, you will also have to calculate interest. That is what I have made you clear. So to calculate an interest, there is a small basic format that we follow. The format seems like this. First thing that you will record in the format is cash price. Cash price will already be given in the question and the hire purchase agreement as well. So directly you can take the cash price here. Immediately after taking cash price, the second thing that you have to deduct from the cash price is, in case on the date of purchase or on the date of agreement, you would have paid some down payment. Like as well, when we go for the purchase of vehicles or any assets, on the date of purchasing, how much of a cash we have, we give it as down payment. Likewise, here also if you have given any cash or down payment on the date of agreement, you can directly deduct it and you can carry forward the balance that is due. So from this balance, From the first year, actual interest and down payment calculation of addition and deduction starts. So with this balance, what we have to do in the first year is, first year interest we have to calculate. This interest, on what basis we have to calculate is, when it is a simple basic problem, directly the question gives the interest rate. The rate of interest is directly given in the question. At such instances, you can directly take the interest and calculate the value and directly add the value and carry forward the balance. On this balance, you have to minus the down payment for the first year. This is how the process happens. So after deducting the down payment, whatever the balance left, this is the balance due for the next coming years. So for the first year, you have to undergo for this much of process. For the next coming years, the same process, that is from here, interest, addition and down payment deduction will be carried forward for the next years, that is second year, third year, fourth year, fifth year. How many years you have got into agreement, those many years, the same process from here will be continued. This is the small format. With this format, let's see a small question on this problem. Let's see the question on calculation of interest. So to start off with the question, and let's try analyzing this question and understand that. So they are trying to tell on 1st April 2009, this hire purchase agreement has started. PQ company, be very clear with the purchaser and vendor. PQ company bought a machinery from HMT Limited. So these are the two parties involved in this agreement. You will also have to be clear who is purchaser and who is vendor here. It is very clear, PQ company is bringing the machinery from HMT Limited. So here HMT Limited becomes hire vendor and here PQ company becomes hire purchaser. So PQ is purchaser and HMT becomes hire vendor. Moving on to the next statement, the agreement is also stating that cash price for this particular machinery is 26,350. So while getting on to this agreement, they are telling, I am purchasing this machinery for rupees 26,350. This becomes the cash price of the machinery. Going on to the next statement, on signing the agreement, on the date of agreement, I am able to pay some amount. What is that amount? That is rupees 10,000. So this becomes down payment. They will not directly give in the question that this becomes down payment. You will have to analyze and understand. On the date of agreement, if any amount is being paid on the cash price, that directly becomes down payment. Going on to the next statement, what the balance, that is 26,350 is the cash price. I am also paying 10,000 down payment. After removing down payment, whatever balance is left, that will be paid in 3-year installments, 3 yearly installments. So here the agreement is for minimum 3 years. This is how we can understand. And one installment is rupees 6,000 each. So one installment for 1 year that I will be paying is rupees 6,000. So this is the analysis of the question. With this understanding, we have to see the format and put in the values and see how it goes. So coming to the format of the solution, they have asked us to calculate interest for each year. This is a basic problem, hence they have asked only interest to calculate. To start off, as we have already seen the format, according to the format, the first thing that we will have to record is cash price of the machine. Here cash price of the machine, as stated in the question, it is 26,350. Directly from the question we have taken it, we have not done any kind of adjustments here. From this, as the format states, we are deducting or minusing down payment. Down payment word directly they have not given in the question, but we have analyzed that on the date of agreement I am paying 10,000 being a purchaser. So down payment I am paying 10,000. So removing down payment, the balance left is 16,350. This is the balance left as of now. Now from this balance, the first year interest and installment calculation starts. So from this balance, first year interest has to be added. Why we have to add here is installment. Directly they have given 6,000, they have not added any kind of installment. So hence we are adding it. So interest is 5%. It is clearly mentioned, that is here I forgot, but it is 5% rate of interest that has been given in the question. So 5% rate of interest in the first year, 5% on this value. If you want, you can write down the calculations here or in the working notes elsewhere. 16,350 was the balance. On this I am applying 5% interest. I will be amounting to 818 rupees. This is the interest for 2009 and 10, that is the first year. Now adding this particular interest, I am amounting to 17,168 rupees. From this, what I will be doing is, I will be removing the first installment for 2009 and 10. First installment, they have clearly mentioned 3-year installments I am paying, and every year I will be paying 6,000 each. So first installment is 6,000. If you remove 6,000 from 17,168, that is the balance, you will be getting 11,168 balance due for next year. That is, first year we have completed now, first year interest is given, first year installment is given. After giving, the balance left for the second year is 11,168. Now coming to the second year, starting off, the balance that left that we had was 11,168. With this, we have to again add the second year interest. So for that, we have to take this balance due, 11,168 into 5% for the second year. That is, you are getting 558 rupees interest for the second year. Adding both, you are amounting to 11,726. From this, you are removing the second installment for the second year, that is 10 and 11. So if you remove 6,000 from 11,726, you are amounting to 5,726 rupees balance due on the second year. Now with this balance, we have to move forward to the third year, that is interest for third year and installment also we will have to deduct. Let us see the interest for the third year. Again, the balance that we are left in the second year is 5,726 into 5%. If you calculate, you will be getting 274 rupees. So if you add 274 to 5,726, you will be amounting to 6,000 rupees. And here, this is one important note that you all have to keep in mind is, third installment or the installment in the third year that we are paying is 6,000. The balance due or the balance that is left also is 6,000. 6,000 minus 6,000, the value should become nil. This is the rule of hire purchase agreement. Once the agreement is on the last date, your all installments has to be completed with interest. Then it becomes nil. So it is, with this you can come to a conclusion that all my installments is done, agreement is also coming to an end, and we can close this agreement, and actually the obsession and the title of the assets or goods that I have purchased on hire basis will be becoming mine at the end. So this is how the calculation of interest happens with hire purchase system. Thank you, my dear students. Any queries, you can comment below. Thank you.